Hello there, Mavericks. This is Imri, and welcome to today's currency recap. It is Thursday, August 3rd. Can't believe we're in August already. Well, let's get right into it. So today we're going to be covering meaningful news of the day. We're going to be taking a look at the broader equity market. We're going to be, of course, looking at commodities and currencies as well. So as far as current market analysis goes, we're going to be conducting some technical analysis on the major indices. We'll be looking at our proprietary currency baskets and looking ahead to this week's major news reports. And then finally, we'll also be looking at some setups in the currency markets. In this currency recap, we will be using advanced technical analysis. We believe technical analysis is the fundamental skill for every profitable currency trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep 70 to 80% of the profits. If you're a technical trader with a technically based trading system, we want to meet you. Click the application link in the description below this video to learn more. Now let's break down today's market action. All right, market analysis. Here is what's going on. So news of the day, there wasn't really a lot of crazy news that's come out, but stocks are continuing to drift a little bit lower. Volatility in currencies is a little bit tame right now as well for today specifically, but bond yields have surged. All right, so if we're looking at the action in today, the big news story really is oil. So there was a news story that Saudi Arabia is going to stick to some voluntary cuts, and that has kind of triggered a surge of buying in the oil market. If that's what you indeed want to attribute the bullish action oil to today, that's as good a reason as any. But other than oil being up, none of the other major markets we're tracking really did all that well today. Both the S&P and the total world stock index slightly down, crypto barely holding its head above water, and gold slightly down on the day. Okay, so now in terms of currencies, so the biggest winner on the day was the yen, followed by the Swissy, reflecting a little bit of the more subdued risk-off sentiment we've seen today in equities. The dollar barely down on the day, euro practically flat, but the biggest loser for sure was the New Zealand dollar, right? And in terms of cryptocurrencies, Litecoin was the biggest loser, and pretty much everything is holding steady, nearly flat on the day. 0.4% up on the day for Bitcoin is nothing. You know, that's pretty much sideways trading right there. Okay, so in terms of the market outlook, well, it's a little bit refreshing to change the outlook from a +3 to a +2, and that's courtesy of prices breaking below that 20-period moving average. But we're still holding above the 50, and the 2050 slope still remains pointed upwards. So you can see that right here. I called out this upper resistance line last week, and you can see how after tagging that line, we have in fact started to drift lower. Jury's out on whether this is going to be a major reversal or just another pullback in what a lot of people are saying is a return to bull market conditions. All right, so in terms of news, well, tomorrow is going to be, there's certainly going to be fireworks. We've got non-farm payroll reports out of the US, and there's going to be employment data coming out of Canada as well. So be very cautious if you're holding any Canadian dollar or US dollar trades. Okay, now in terms of a little bit more in-depth currency analysis, taking a look at our volatility scores, the yen's looking good, the Swissy's looking good. The Canadian dollar, the Aussie dollar, and the Kiwi dollar are all showing signs of negative velocity, with the euro and the US dollar being somewhat neutral. So those are kinds of the currency pairings we want to be looking at here. We'll definitely be taking a look at the yen, especially relative to the Canadian dollar and the US dollar, because I think there is potential for some interesting stuff to happen there. Okay, so with that said, let's take a look at some possible trades as we head over to TradingView. So last week, I said look out for the yen to tag the upper boundary line of this channel before coming off, or potentially coming off, and we came off hard. So that now leaves us with an interesting question in terms of where we are in the larger trend. Well, given how far we've come off, I mean, the yen historically, and I love showing this monthly chart for a yen basket because it's truly incredible. I mean, as far as the data in this basket goes, which doesn't go back all that far, admittedly, we're looking at 2006 onwards, but still, this is a historic low in the yen. And even on the monthly chart, we're showing signs of being oversold on the relative strength index. So here we kind of have to balance the fact that the yen's been in a downtrend for a very long time, and we want to stick with that trend until proven otherwise. On the other hand, we don't want to necessarily be taking, we don't want to be selling into a hole. If something's getting ready to bounce, we should be able to assess the odds of whether that bounce is going to see significant follow through and how far it's going to go. All that's to say is that the picture in the yen, in my opinion right now, is very unclear. I can make an argument just purely by looking at the yen basket for both higher and lower in terms of the yen's values. So if my personal discretionary analysis on the yen is that we're pretty much at coin flip territory in terms of heading higher or lower, then the question really becomes, well, how do the other baskets look? Is there something that looks clearly weak? And that's a good question. Before we move over to a few other currency baskets, however, I just want to look at the moving averages. So you can see here on the 4-hour chart, we're above the 20 and 50 period moving average. And on the daily chart, we broke above both moving averages before falling down, and we're now right between both moving averages. This is again on the daily time frame, which is why I think we're in no man's land, so to speak, in the yen. So I'm very cautious with the yen. I think the risk is skewed to the upside in terms of yen crosses. What that means is I think the yen crosses have a lot further to fall in the long run than they do to rise. In other words, we're overdue for yen strength, even if it is for a more significant pullback in what is still predominantly a larger bear market for the Japanese yen. So bottom line, too long didn't read version is just be very careful with the yen. The potential for volatility is very high, and I don't have a clear directional read in terms of which way that volatility is going to break. Okay, moving on now to the US dollar. So the dollar is a little bit surprising in my opinion. I didn't expect this fierce of a rally. Now, this rally has not taken out the prior swing point, which is the high from the end of June, and you can see that comes in at 122. So until we take that out, I'm inclined to give the developing bear market, or what I see as a potentially developing bear market in the dollar, the benefit of the doubt. I think we're going to have some answers tomorrow with the non-farm payroll reports coming out. Should be a volatility event. If we do break above 122, that end of June high, then I think the next area of resistance is pretty clear. We're looking at this prior double top here. So the second top was the end of May, and the first top was the beginning of March. If we take that out, then we're going to see some significant dollar strength, likely. But until that happens, I'd say my bias would be towards a short dollar. So again, let's look at some moving averages. On the 4-hour chart, the moving averages are undeniably bullish. On the daily chart, we've broken above both moving averages, but the slope has not shifted upwards. And as we get to the weekly moving averages, you can see how we're right between the 20 and 50 period weekly moving averages. All right, next up is the Swissy. So the Swissy, I said, hey, I'm starting to get a little bit bearish just because of historically how high or how far the Swissy has come. Again, this data doesn't go back very far in this basket, but based on the data we have here, this is a historic high in the Swiss franc. So given that, I'm feeling a little bit cautious, especially with momentum indicators being this stretched out. That being said, trends in the currency market can continue for quite some time. And this is a classic high base. So given, this is on the daily chart, given we're above both moving averages, and even on the 4-hour time frame, you can see how we've broken above both moving averages in the 20s, now sloping over the 50. So given all of that, you have to go with what the chart's telling you. And I might not personally like it because I think the risk is skewed lower in the Swiss franc. I got to go with what the chart says. So I'll be looking for reasons to buy the Swissy, at least on a short-term basis, if the right chart setup presents itself. Okay, Euro's just chopping around. It's gone sideways. We violated this trend line, broke below it, tagged this support at 132.70, and then traded higher to tag resistance at 134.70. Not exactly sure what's going to happen here. The euro also is more or less a coin flip, and I think tomorrow's volatility event with the non-farm payrolls report is going to go a long way towards telling us what to expect. Bottom line, I'm looking for this range to break at some point, whether we decisively break below it and stay below it, or whether we break above that range and continue higher. I don't really care which way we go. I just want the market to give us a clear sign that either this trend is over, the uptrend in the euro, that is, which started off towards the end of August in 2022. So I just want to know whether that uptrend is over and we're going to see a period of significant euro weakness, or if there is more euro strength to play for. And the chart is what's going to tell us which way that's going to go, but we just don't have a clear sign right this second. And it's exactly the same story with the pound. Based on history, and how I've called out this resistance area numerous times, I really would love to short the pound because I think the risk is skewed to the downside, but we haven't seen any bearish follow through. So that's put me on the sidelines with the pound as well. The Canadian dollar, finally something a little bit more clear. I really like the shape of this bearish move here. Why do I like it? It's because we broke the swing low from June 15th, and that tells me that we've broken a series of higher highs and higher lows, and the Canadian dollar might now be in a nascent downtrend. If that's the case, then this should be a bear market rally. This is simply a rally in what is still a developing bear market. Pretty simple. I'm just going to draw a trend line here. I'm going to draw another trend line like here. And if we break below this lower trend line, I think that's a pretty good signal to start looking on the actual currency pairs for something actionable to do with the Canadian dollar in terms of shorting it. Okay, next up is the Aussie dollar. So after laying out a bullish case for the Aussie and the Aussie just not following through at all, it's time to potentially switch gears. I'll say this is the last, potentially the last week where I think if you're an Aussie dollar bull, you have any hope of hanging on. And that's because you can see this important support area I've just laid out, and we're right on it now. If we break decisively below the support region, then I think you can look for reasons to short the Aussie dollar for quite some time. On the other hand, if we do hold the support and we bounce higher, we've held this support every time we've come down here, going back to June 2020. So this is a very important support area. If it holds one more time, then I think we can look to test this downward sloping blue resistance line, which would get us back into territory that we haven't seen in at least a few months. So that's potentially pretty interesting. All right, New Zealand dollar, very similar kind of structure, bearish structure here, where I was saying, let's give the Kiwi dollar and the Aussie dollar the benefit of the doubt. Let's see if they can break higher, and they just haven't been able to. So I'm bearish the Kiwi dollar for the short term. To the intermediate term, I'm looking for reasons to sell the Kiwi dollar against its other peers. And all right, that concludes our analysis of the currency baskets. So in conclusion, make sure that you're always playing relative strength and weakness. That's by far one of the most powerful things you can do to put the odds on your side. And of course, pay attention to proper position sizing. All right, so that's it for me. Oh, tomorrow, August 4th, 6:15 a.m. Mountain Time, we're going to be trading the NFP report. All right, so keep that on your calendars. Otherwise, I'll see you next week, traders. Take care. Bye for now.